Good evening, all. First of all, I am very much thankful to the Bombay Chartered Accountant Society, BCAS, and all the other association to make this event successful. And on behalf of AIFTP West Zone, we are conducting this session. I am the chairman, C. Akshay Modi. First of all, welcoming the today's speaker, Advocate Pankaj Agarwal ji, and I am thankful to him for giving his precious time to our seminar, and also I am very eager to hear his deliberation on the topic, that is presumptive taxation. This is the evergreen and ever live topic. Even the litigations are increasing day by day on this topic. So, sir, thank you for giving your valuable time to all the associations and all the delegates who have joined for this seminar. Regarding the AIFTP is the federation having 5 zones: West Zone, Central Zone, Eastern Zone, and North and South Zone. Is working with a motto of ethical practice and having to make younger advocates more and more confident, and to make them more to make them appear before the courts and the litigation practice. This is the main aim of AIFTP. It is always working for the betterment of professionals, that is chartered accountant, advocates, even the tax practitioners, and CS and CMAs are member of the AIFTP. Total membership strength is more than 12,500 these days. So whoever delegates who are not the member of the AIFTP Western Zone are requested, AIFTP are requested to be the member of the AIFTP first. Now I would like to introduce the speaker, today's speaker, Mr. Pankaj Agarwal ji. Sir is the qualified chartered accountant in the year November 1983. In that year, even I have not born yet. He is also advocate, completed in 2006. He is in the practice since 43 years and partner of Mittal Gupta and Company. He has been chairman of Lucknow branch of Central India Regional Council in the year 1988. He has also been into various positions, mainly Vice Chairman, Secretary, Treasurer of Central India Regional Council of ICAI. He is the founder, President of Lucknow Chartered Accountants Society in the year 1998-2000. He is also member of Lucknow Chartered Accountants Society, Bombay Chartered Accountants Society, Chamber of Tax Consultant Mumbai, AIFTP, Forum of Free Enterprises, Income Tax Appellate Tribunal Bar Association Lucknow, and Lucknow Chartered Accountant Practitioners Association. He has also introduced the member of study groups in the Central India Regional Council for preparation of guidance note on tax audit, draft company bill, guidance note on audit of consolidated financial statement, guidance note on income tax computation and disclosure standards. He has also authored and presented technical papers in seminars, conferences, workshops, and refresher courses on the subject of accountancy, auditing, direct taxation, corporate laws, and Right to Information Act and Information Technology Act. He has also chaired the technical session at seminar of Lucknow branch of Central India Regional Council of ICAI. He is also a group leader at residential refresher courses organized by Bombay Chartered Accountant Society. He has also written various articles to be published in the various professional bodies and professional journals. He has authored book on commentary on the prohibition of Benami Property Transaction Act 1988. He has been guest speaker at Direct Taxes Regional Training Institute, Lucknow. Sir, we welcome on behalf of all the associations, and now I would like to request you to start your session, sir. Thank you.
Thank you, Akshay ji, for this nice introduction. At the outset, I thank Bombay Chartered Accountants Society, with whom I have been associated for the last more than 30 years. And inspired by that PCS, we also formed Lucknow Chartered Accountants Society at Lucknow. I also thank other sister organizations who have joined to this refresher course, which has benefited a lot the members across the India. So the topic given to me is presumptive taxation, practical issues and case studies. The ground for this topic has been laid day before yesterday by Mr. C.A. Bhadresh when he took up the topic on business computation of business income. He touched upon this subject also, and from there I will take it forward. And so, what is going to be my scheme of presentation? First, let me introduce you. In brief, I will be introducing what is presumptive taxation, what is its meaning, and more focus of mine will be on the three sections, old sections 44 AD, ADA, AE, which is now merged in section 58, and the other sections which are related to non-resident, which has been now merged in section 61, 66 and 59. Briefly, I will be touching upon those sections. When we talk of presumptive taxation, we generally refer to presumptive taxation under the head business income. But in my understanding, each head of income has got some or the other presumptive nature of taxation. For example, in salary, if we see perquisite valuation, what is it? It is presumptive taxation only. Income from house property, when we deem some annual letting value, that is also a presumptive taxation only. Similarly, in capital gains, stamp duty valuation, this also amounts to presumptive taxation because the law is presuming something to be your income or consideration for computation of income, while in fact actual income is something else. Similarly, in other sources also, present section 50 says that if you receive something without consideration or less than consideration, then also stamp duty value is deemed to be its consideration, deems to be the income. In business, there are specific provisions to deem how much income will be presumed to be the income in those respective sections. So before moving further, we should see what is the meaning of presumptive. Though presumptive is not used in any of the section, in the body of the section, only under the business head, in section heading you will find the term presumptive being used, but not in the body of section. Advanced Law Lexicon by P. Ramnath Iyer defines presumptive that which may be assumed to be valid or true until the contrary is established. This word is not used in the provision, but it is appearing only in heading. Instead, in the body of the section you will find the term used is shall be deemed. In other words, with the use of this word shall be deemed, it become at par with the other provisions where deeming fiction gets applied. So here also in my understanding, the provisions and the rules of deeming fiction will get applied. So what are those rules which applies to any deeming fiction? Let us see. A supposition of a law that a thing is true, which is either certainly not true or at least is as probably false as true. This is dictionary meaning, and there are certain decisions also which has dealt with deeming fictions. What do they say? The concept of fiction assumes quite significance in the context of tax law, especially the Income Tax Act, for the simple reason that the fiction many times acts as an antithesis to the concept of real income under the tax laws. It is settled law that income which is susceptible to tax is the real income as is commercially understood, subject to statutory modification thereto. It is the rule of interpretation well settled that in construing the scope of a legal fiction, it would be proper and even necessary to assume all those facts on which alone the fiction can operate, and a construction which defeats the very purpose sought to be achieved by the legislature by introducing the fiction must be, if possible, be avoided. This is Supreme Court in one of the decision, and in one of the decision, Bombay High Court has said so about deeming provision. So this being a deeming provision, we should see how these provisions will get operated. So before going further, we shall do a little bit comparison between the old section 44 AD and the new section 58. In sum and substance, except for one major change which I will deal later, there is no major change in substance as far as I could understand between the two provisions. In the heading, or profession has been added because now we know earlier there were three sections, 44 AD, 44 AE and 44 ADA. All these three sections which were getting applied to resident SSCs are now merged in one section, that is section 58, with the table providing for all the three different scenarios. So in heading, only this what I have highlighted has been added, or profession. In case of certain residents, there is no substantial change here. In second portion also, I have highlighted, as the case may be, a sum higher shall be deemed. Shall be deemed is coming again. As the case may be, a sum higher. Now it is coming in the new provision in a different manner. Let us see. The main provision says an SSC specified in column C of the said table having total turnover or gross receipts during the tax year is specified in column D and computed in the manner specified in column C thereof. Let us see how this is coming in the new provisions. See, as the case may be, these words you should keep in mind, because when we will discuss the various issues and various provisions, these will be very relevant to understand how they are playing and what impact they will have. Here, as the case may be, a sum higher claimed to have been earned. Now, with the wording claimed to have been earned, one more word actually has been brought in. And as the case may be, has become a comparative. Now they put two conditions, A and B, and then makes a comparison between the two, as whichever is higher, with the word whichever is higher. Earlier, these two clauses were being compared with these two terms, as the case may be, and a sum higher. In my understanding, the new provisions are at par with the old provisions, only with the manner of its presentation and with the change in presentation of the language. Now it is in table form. Both the conditions are being provided separately with a comparison and to choose whichever is higher. The earlier aspect shall be deemed is there. Earlier also it was there. Now what are the issues? What issues are coming? Let us see and discuss. These issues will be relevant for 44 AE, 44 ADA. For all the places, the similar wordings were coming earlier also. Now it is common with subsection 1. So we shall discuss these provisions one by one. This QR code I have just provided with a purpose. You can scan it. Long back we have put one article on itatonline.org on this very subject, when there was a very much professional discussion going on whether a person can show his professional income less at 50%, though his income may be higher. Then we have penned down one article which is now still available on itatonline.org. This QR code provides link to that. One may take it and go through it for detailed discussion. First query which I have raised here is there any difference in two provisions? In my understanding, there is no difference. Earlier also there was a comparison between the two scenarios. A presumptive rate given, that is 8% or 6%, with the actual income claimed to have been earned by the SSC, and assessee was supposed to return higher income. Why I am saying so, that we will discuss later when this issue will come. Still, the same provisions continues. In my view, there is no difference. If we say that it gives an option or it gives a choice, then these few terms will become odious. Word as the case may be is provided in the old section. What does it mean? It means as the situation may be. As per legal lexicon also the meaning is whichever is the case may be. That means if you are having an income higher than the prescribed rate, then you are supposed to return the higher income. You cannot say that since the rate has been prescribed in the law, I will stick to that even though my income is higher. My conduct is such, my savings are such, my investments are such, which suggest that my income is higher than the prescribed rate. But still I will return my income at the rate given in the section. That is not the spirit of the law. That is not required by the law. Because if we hold so, then these wordings as the case may be becomes odious. And in interpretation of law, nothing is odious. The option given is just to make it easy, you return your correct income. Section 4 and Section 5 and the verification of the return also puts an obligation upon you to return your correct income. Sometimes our professional brothers say that how one will know what is his correct income when he is not maintaining the books. I am very sorry, at foundation stage we know to prepare our books from incomplete records. Secondly, even a street vendor, even a vegetable vendor knows how much he earns in a day. So very well he can make out how much his income has been in a year. On an average basis, he may not be correct. The law does not envisage that whatever you are returning will be the correct income. But actually, you know how much is your income, what is your percentage of profit, how much profit you are earning. I remember a very old story. My father used to tell me when we were having a small business, and earlier there used to be compulsory assessment, scrutiny assessment. So one gentleman, the ITO was so smart, he asked for sale bills of the last month and corresponding purchases bill of the last month. And from there he derived what actual profit you are earning. So from sample basis also one can make out how much is your income. Particularly in the case of professionals also when 44 AD came, then this issue came up in the light very openly. Everyone was showing 50% and saying that I am not obliged to make my correct income. When there are certain professions where even 90%, 99% is your income. Even you don't spend even a penny. If you are giving some consultancy, sometimes steno will come from your client's office and you will take dictation and prepare the draft, prepare your reply, and you are putting your signatures. Whole saving is appearing in your bank account. How you can claim that your profit is less than 50 is only 50% or less, not more than that. So in my understanding, if you, and I will come to next term, claim, that is also very important to use there. And there is a diverse opinion. Our professional says, based on one Supreme Court decision, that claim gives me an option. It is my choice whether to claim or not. So I will ask one question, is it so? As per Webster's dictionary, it means to state as a fact or as one's belief. Something that may be called into question, assert. Not necessary you assert that your income is this much in your return only. Claim that investments have been made by my income from this source, which I am showing at 50%, but your surplus or your investment during the year is much more than the income which you have shown in the return. You yourself is contradicting yourself that your income is less than is the amount which you have shown in the return. We professionals sometimes claim something out of context. Professionals refer to Supreme Court judgment in the Mahindra Mills case, where Supreme Court was concerned with the claim of depreciation being thrust upon the SSC. In this case, what has happened? That the SSC revised his return, withdrawing his claim of depreciation because that was more beneficial to him, because his WDV will go up and in subsequent year he can claim more depreciation. And in this year, because of higher income, he can claim it from other benefits. So he did not want to claim depreciation. He didn't claim. So the Supreme Court held that this cannot be thrust upon the SSC. This has to be, because there is one more requirement, that for claiming depreciation, SSC is required to furnish the details or the information about depreciation. Based on this judgment, we sometimes argue that the Supreme Court has said that claim has to be made through return only. Claim cannot be thrust. My question is, can the same yardstick be applied to an obligation? That was in the context of the right which the SSC is having. Right cannot be thrust upon unless claimed for. But in the case of obligation, the same yardstick cannot be applied. If I have to say by an example, suppose I am to take some money, I have lent some money to someone and to take it from him. It is my right to forego that right to claim money from him. I can say that I will not claim that money. I do not demand money from him. I can say, he can say that unless you claim it, I will not pay you. But if I have an obligation to repay something, if I have an obligation to pay back something, I cannot say that I will not pay this money unless and until claimed from me. The yardstick of claim will be different when there is a right. Yardstick will be different when there is an obligation to claim. Claim, as I tell earlier, means assert. Assert means, assert can be at any time. At the time of assessment, if you are asserting that your income is higher than the 50%, then you are supposed to return income higher than 50%. And if you have not done so, you are contravening the verification which you did in the return. And in my view, that is the incorrect hypothesis or incorrect interpretation, that it is an optional provision and one can show exactly percentage which is given there, though his income is much more than that percentage given in the relevant section. I have covered the next issue. Is there any option with the SSC not to return higher income even though he knows his income is higher? In my view, it is an obligation to return the correct income which he supposes or which he asserts that it is my income. He cannot say that the benchmark has been given in the Income Tax Act. That benchmark is for income. If you are having a lesser income and you don't want to go into the hassle of maintaining books of account, you can very well adopt that yardstick and return your income. But if the conduct, if your investment, if your expenditure level, or if your that suggests that your income is much higher, then you are supposed to return the correct income, whatever it may be, how much higher it may be from the level given there. Another issue is, can AO take recourse to provisions of unexplained investment, unexplained expenditure, etc. and enhance the income? Generally, the assessing officer, unless and until he establishes that they are separate, independent and does not relate to the your business income, then certainly they can adopt or they can do assessment resorting to those sections. But generally not. The case studies, the case laws which has generally come to my knowledge, relates to proving inquiries being made by the assessing officer. when the assessing officer starts making roving inquiries, taking your passbooks and asking for details and doing this enhancement, then the courts have said that this purpose is the provisions of this section. This presumptive taxation is to provide ease to the SSE or ease to small businesses. So, in such a circumstances, but unless and until something more is brought on record by the assessing officer, generally they cannot resort to these provisions of unexplained investment, unexplained expenditure, etc. and enhance the income. Just going through, I found one case specifically on unexplained cash credit, in which it was held that assessing officer can very well adopt to this unexplained cash credit as well as 4480. It was an old decision in civil construction business, that is 41 attachment.com 17 2014. So it was in the when this was applicable to civil construction. In that case, the court held yes, both can be applied. So there is no such restriction that assessing officer cannot do. But generally, unless and until he brought something on record that these transactions does not relate to the business activity or the assessing or the SSC has some other source of income and these relates to that, then only he can do resort to these sections. Now coming to eligible SSC. There are three clauses in table. Number one is regarding the corresponding to 4480. Second is corresponding to 44AE. And third one is 44ADA. In the first column corresponding to 4480, the term used is eligible SSC. Who can avail this benefit of presumptive taxation? That is eligible SSC. And who is eligible SSC? One who has not claimed deduction and claimed any deduction under Chapter 8C for the relevant tax year. 8C is similar to 80IB Chapter 6AC, that is deductions relating to income rate like 80IA, 80IB, etc. Does not carry on specified profession as defined in Section 62(4). Earlier section that 44AA4. Here 62(4). And third one is he is not carrying on income in the nature of commission or brokerage, does not carry on agency business. Similar definition of eligible businesses in the present law also. So earlier this definition was in two parts. Half part was in explanation and half part is subject. When an SSC becomes an eligible SSC, non-eligible SSC, I should say, then he cannot claim, he cannot go for presumptive taxation as regards eligible business is concerned. He is out from eligible business, claiming presumptive taxation for eligible business only, not from 44AE or not from 44ADA, because ADA applies to specified business. Others, if he is carrying on commission business or agency business, then he is not entitled for adopting this presumptive income. I will move ahead to see what is the definition of specified profession. The specified first definition of profession is profession includes vocation, and a specified profession is given in Section 64: legal, medical, engineering, architectural, accountancy, technical consultancy, interior decoration, information technology, or company secretary, or any other profession as may be notified by the board in this behalf, and in present notification, authorized representative, film artist, information technology. And company secretary was also there, which has been included in now in section itself, though it was earlier notified, now it is part of section itself. What is the significance of this? We will discuss when I come to 42DA. This is further become important that from eligible SSC, only specified professionals are carved out. remaining professionals who are not falling within the definition of a specified profession can claim the benefit of presumptive taxation if they are carrying on any business. The provisions of this section 58 will become applicable to them if they are carrying on some profession along with some business. Here, an issue arises, one question arises that whether eligible business will include his professional income or not. Can that professional income get included with this business income, and he can apply 8%, 6% or actual? So here I am trying to cover, first to define what is profession, because they are carving out a specific profession, not all the profession. A profession involves the idea of an occupation requiring either purely intellectual skill or any manual skill, as in painting and sculpture. Profession means an occupation carried out by a person by way of his personal and specialized qualification, training or skill. So in a way, if we go through all these judgments, we will find that when we say that it is a professional, there is a more involvement of skill or training or some specialized knowledge, specialized qualification. Production or sale or arrangement is missing. On the other hand, if we see the definition of business, it is more of trade, commerce or adventure in that nature of trade or commerce. Profession is more of skill. Wherever some skill comes, it amounts to profession, and profession is defined to include vocation also. So these are because I will be sharing this, my presentation, so I will not take much of time in reading these meanings. So these are the judicial meanings which has been given to the term profession. I have made some queries and case studies, short of things, and for your participation, so what I have done is, I have tried to make interactive participation. I'll just in the next slide, I will be showing you one quiz form, and so everybody can participate and give his views. So this is one query which I have tried to envisage. There is one doctor carrying medical profession. He is having 3 different scenarios. Though I am here presently dealing with serial number 1, that is eligible business, but one can give answer keeping in mind his profession also. He dispenses medicines also, and his fees includes prices of medicine also. This is one scenario. Secondly, he owns a retail medical shop which sells medicine to the patients on the prescriptions of Dr. Lal and also on prescriptions of other nearby doctors. He is also running a wholesale business of surgical goods. These are the 3 different scenarios, and on based of 3 different scenarios, I have made one which, let us see. This, using this QR code or this HTTPS, I will request the participants to give his views so that all gets participate, because we are already 700 persons are associated, so we can see. I'll give 2-3 minutes times. 3 responses have come. Good response is coming, and the majority is right in his view. Since he is carrying on a profession of medical, and he is not an eligible SSC. Since he is not an eligible SSC, he is out from that provision, and for his other businesses which he is carrying on, that is a retail shop or wholesale shop, he cannot adopt the presumptive taxation, and he will go through the normal procedure, that is by maintaining books of account, by giving evidences. Only he can return his income. For other 2, he cannot say that based on my turnover I am returning my income. He will have to give evidences, and he will have to prove his income. For his professional service, the dispensing of medicine is a part of his professional medical service. So he can certainly take benefit since his professional fees includes cost of medicine though, but majorly, substantially, it is his professional skill which is involved there. So for that receipt, for professional receipt, he can certainly do this and take it. So now I am moving ahead. Those who have not done, they can continue it, no issue. There is another query. This is based on another aspect which I just said, that one is carrying on a vocation. It is not a specified profession. So he is an eligible SSC since he is not out from the definition of that eligible SSC. Now the question arises, what will be the eligible business? Whether that will include his professional income also, or professional income has to be treated or has to be dealt with independently. This is another issue, and here also I have made this quiz. One can scan and do, so we can just enjoy and see the responses of others. So friends, here in my view, minority of 11% is correct. In democracy, majority is not always right. So here, the reason being, in my understanding, only 12% is correct. For singing and MSME, both he cannot do it. Because in the Income Tax Act, we know that business and profession is used in a mutually exclusive term. Everywhere, the words used is business or profession. So business does not include profession. That's why in the terms of eligible business, any income in the nature of profession will not get covered in my understanding. So, and secondly, the rates which has been prescribed, they are 8% or 6%. That also not come in, is not accordingly fit in with the professional income. Business does not include profession. Business and profession goes parallel in under the Income Tax Act. Wherever it has been used, both the terms has been used exclusively business or profession. Profits and gains of business or profession. In this particular 58 section also, in the heading, in the section heading, the context, everywhere the word used is business or profession. So in my understanding, eligible business will not include profession. So eligible SSC will be the person who is carrying on non-specified profession. If you are carrying on specified profession, you are out. You are not even an eligible SSC, so the question of eligible business does not arise. Here you are an eligible SSC because you are carrying on a profession which is non-specified profession. So in case of eligible business, certainly you can adopt presumptive taxation and you can return your income based on presumptive taxation, that is 8% or 6% as the case may be, or higher income which you have actually returned, you can adopt it. So, this was my another query. I think you would have liked it because 194% responses out of 700, good response. So, and secondly, cannot declare this also I clarified.
चलो आओ समझ के आए यार.
He is an eligible SSC.
चलो
He
समझ
can
गए.
certainly declare on. This is my understanding of the provision. He can do so, but not for the professional income.
क्या? हाँ सुनो बोलो.
इतना सा मूंग, इतना सा चावल, इतना सा गुड़, नारियल और हल्दी, सुपारी, धनिया तक दे दिया उसी को.
इसको.
इसी को.
Eligible business, nothing to add because this is already same definition. Only the thing is that turnover which was part of the section is now part of table column C. There it has been defined what will be the turnover limit, that is 2 crores or 3 crores, where cash received does not exceed 5% of the total turnover, there it will be 3 crores, otherwise 2 crores. So there is nothing. And only thing is, any business other than the business is specified against serial number 2, then because separately covered, so that has been taken out from this table serial number 1. Now another moot question which comes in this particular section that boggles our mind. Number 1 thing is reimbursement of expenses, particularly where tax has been deducted at source under section 393, table serial number 84. Earlier it was 194. One view is, since it is a reimbursement of expenses, it will not form part of my income, my turnover or processing. But here is a catch. As we have just discussed 28.4 earlier section in the just previous session, board has issued a circular in the context of 194R. What does they say there? They say that in case of reimbursement of expenses, it is an income or it is a benefit in the hands of the recipient. They have given an example. For example, a profession is rendering a service, and if he is getting a reimbursement of travelling expenses, they say in rendering the service, professional is bound to incur that expenditure, and so they will be receiving it as an income, and they can certainly claim expenditure for this income. So we should read that circular, and in that light, though it will actually be our expenditure, so that circular we should read, and accordingly we should decide whether it will form part of my turnover or not. They say that if you have, we also know that in GST there is a concept of pure agent. If we are a pure agent, then it will not apply. But if it is not a pure agent concept, if we are getting something as a reimbursement, even GST gets applied. If we are not a pure agent, then it will become part of your turnover or processing. And there is a specific circular very clarifying that, and TDS is also being deducted by the payers. So we should be careful that that will become part of our total turnover or processing, as the case may be, in the light of that circular and 194R provisions. The second issue is indirect taxes collected separately. Here, I don't have a direct answer, but section 145, 145A, to what extent they will get applied here, get attracted here, that is a moot question. One can take a view that 145 and 145 capital A will get attracted only when we maintain a books of account. Secondly, when we are collecting indirect taxes separately, this is a levy on behalf of the government, we are collecting on behalf of the government. And secondly, there is a no profit element in such a collection. Whatever I am collecting, I am totally paying to the government. So if we can take this view, though debatable, though it is yet to be tested, but in my view, taking these two views, we can certainly say that indirect taxes should not form part of turnover or processing. When I was surfing through the judgment, in the context of 44BB, I get one judgment where it says that GST will not be included. But there is a catch that there the term used is amount received, not the word turnover or processing. So that with that difference, but that logic we can extend here also, that since it is a statutory levy which we are supposed to pay to the government, and it does not involve any profit or any surplus in my hand, so this provision for this purpose, this turnover should not form part of my turnover for determining or computing the income under this presumptive taxation. This is my personal view. I don't know how this is yet to be tested. This I have covered as applicability of section 43CA. That is very relevant here in case of a builders, though it is an amounts to eligible business, but turnover will be based on actual amount which he has received or based on stamp duty valuation. Here, in my understanding, 43CA will get attracted because turnover, when we are taking case to case, it says that you will have to compute it based on stamp duty valuation. And there was one judgment I could find, but it was otherwise. That case, what has happened, in addition to 44 AD, the assessing officer assessed the difference under section 43CA also, while the assessee himself has taken the 43CA value as a turnover. So that is that one judgment I could get. There cannot be double assessment, double counting of the same sale, but in my understanding, 43CA may get attracted in computing the value of turnover in the case of builder or in the case of real estate dealers. This is again very crucial point of discussion amongst us. I have given first what was the provision prior to 2017, then I have given a provision which were relevant after 1/4/2017. We are fond of doing literal interpretation because literal interpretation is said to be a golden rule of interpretation. But sometimes, while doing so, many times we forget that there is a concept of purposive interpretation, or we should see what was the purpose of law, or there is a hidden principle of interpretation also that is called mischief rule. So if we discuss this provision, there are a number of issues will come. Actually, what has happened, earlier there was a specific subsection 5 which has provided that in case you claim, we know that subsection 1 provides a deeming provision that your income will be computed with this benchmark, that is 8%, 6%, or actual income which you have earned if that is higher. If your income is below that benchmark, then there was an option given in subsection 5 which says that if you claim that your income is less than that benchmark, you maintain your books of account, get them audited and come and file your return to determine your income. Even before that, when I go in the history, originally it was provided that if you claim lesser amount, then you will have to go for a compulsory scrutiny. Later on, this was replaced that you will maintain the books of account and get them audited. But what has happened in 2017, this 4 and 5 were substituted with a new provision. Then it has created a new scenario, new problem. If we read the subsection 4, it says that if you have returned income on resumptive basis in any of the year, and thereafter subsequently for 5 years you have not returned on presumptive basis on in any of the year, then for subsequent you are required, you are not eligible to claim the benefit for subsequent 5 years from the assessment year in which you have opted out of this provision for the first year. Now the first question which arises by reading, what will happen in the very first year if your income goes below? In the very first year, if you have income less than 8% or 6%, what is the option before you? Because generally we are interpreting this provision in a fashion that since I have not returned income on resumptive basis in any year earlier, this is my first year, so this provision is not applicable to me. I am not required anything to do, not required to do my audit. Then the moot question which arises, which come to my mind is how you will come out of the deeming provision of subsection 1. That share shall be deemed to be the income of this 8% or 6%. How you will come out of that? Earlier there was a specific provision, subsection 5. Another issue which is coming to my mind, suppose I have done this 5-year period is how to be reckoned with. Because every year is a separate provision. Suppose I am in the 5th year. I have, for the 5 years I have done this presumptive taxation, higher income I have shown. In 6th year I am withdrawing, I am showing lesser income. So this will be the first year with reference to 5th year, or the block of 5 years will have to be seen and will be seen. In my understanding, from each year it has to be seen, and from 5th year it will become my first year. Secondly, if I do the purposive interpretation, then I understand that the purpose of this bringing this subsection 4 was to bring discipline amongst the SSC. If they start maintaining books of account and getting them audited, then they should continue to do it for at least for 5 years. They cannot withdraw that I will not maintain the books of account after 2 years. For every year I have it twice. 1 year I maintain the books of account, return my income based my real income based on my books of account. Again in next year I will adopt benchmark rate. 3rd year again I go on. To stop this, hoping this provision was brought in my understanding. Secondly, if I interpret strictly in this fashion, I could not find what benefit this provision or this section is providing to me. This section does not say that I am not required to maintain books of account. Section 44AA or corresponding section 62 probably, that also does not give me. So, does this section prohibit me to show higher income in the 3rd year? Suppose 5 years as well I was showing my income was really higher than the benchmark. In 6th year, because of one line of business I have lost, my business has gone down, my profit is below the benchmark. Another in the next year I got one business which is giving me handsome profit. Again my profit has gone up. So can we say that the presumptive rate, presumptive section I cannot show my income higher, because this says that for subsequent 5 assessment years relevant to peer I cannot declare income in accordance with subsection 1, because subsection 1 is saying that shall be deemed to be higher. It is not saying, it is a deeming provision. So my understanding that the only thing which subsection 4 is doing is you stop hoping if you have come out or start maintaining, bringing discipline in your business, so continue to maintain that discipline for subsequent 5 years. That you have to do despite the fact that your income has gone above, or you are proposing to return higher income than the benchmark or the bench income at the rates given as a benchmark. And secondly, if you read the subsection 5, you will find it says an eligible SSC to whom the provisions of subsection 4 are applicable. So who is that person to whom subsection 4 is applicable? In my understanding, the person is who is not declaring the income in accordance with subsection 1, that is as per the income higher than the benchmark or at the benchmark rate. It is that person, and to that, if he becomes that person, then subsection 5 will become applicable, and he can declare even in the first year of income his income based on actual basis by maintaining books of account and getting him this audited. This is my understanding of this provision, because we have to read down the provision to make it applicable the first year of income. Otherwise there is no option left except showing the income at the higher rate or at the benchmark rate as given in subsection 1, now in table serial 1. This is now, the section is very specific. There is no confusion in 2025 Act. Now it says any SSC mentioned in column C of the table in subsection 2 who claims that the profit or gains earned are lower, whose total income exceeds the maximum amount, keep and maintain such books of account, get the account audited, and require under section 63 This also supports my view. We can see that before 2017 also this was the situation. Now also 2025 this is the situation which the government claims that we have not made any major changes. So in my view this supports also that view. This is my view as regards claiming lower profit. Now this I have covered what is the benefit which is being denied by subsection 4. Presently, specifically there is no benefit except that by interpretation we can say that if we return income as per subsection 1, then we are free from maintaining hassle of maintaining books of account and getting them audited if it falls within that limit. New business, this issue I have covered. This also I have covered, so I shall proceed further. This is another issue, allowability of interest, partners' remuneration and interest. Now, there is a blanket ban that it cannot be allowed, 44 ADA, but in 44 AE, I should mention that there is a provision that partners' interest can be allowed, but not in case of eligible business and eligible specified profession. There one cannot take benefit of partners' remuneration and interest. There is a specific provision in law earlier. Also it was there, now in new provision also it is this restriction continued. This is a great major change as far as policy change I will say. Now subsection 4 puts a blanket ban that says any loss, allowance or deduction allowable under the provisions of this Act shall not be allowed against the income computed in the manner specified in subsection 2. What does it mean? It means any loss. If you have got loss under the head income from house property, you are having some income from house property, there some loss is arising because of interest payment, that loss will not get allowed. Now, if you are having income, having turnover of 2 crore rupees and you are returning income, your income is benchmark income or higher income, then you will not be allowed any loss, allowance or deduction under the provisions of this Act. 1961 Act, there were only specific sections 30 to 38, that is deductions under the head business, but now it is a blanket ban and this has been done deliberately, knowingly, consciously. Why so? This issue was there, representations were there before select committee. So this was the first representation proposing here. So we will just review this formulation that while doing simplification, we ended up creating a situation where tax policy itself is getting revisited. We will examine, and when I said we will send revised, but now what happened later? Now this has been given proposed provision in the bill. This is, they have given in summary what are the things and what rationale they have given, that is more important. And they say for non-allowance of deduction, presumption of income is only a small fraction of the total receipt. For retail business, it is only 8% or 6% of the receipts. Income will translate into effective tax rate of 2.5%. In nutshell, the crux of their submission is that we are taking a very, very small amount of tax, and in some cases the income being less than 12 lakhs, even their assessees are not required to pay any tax, or in case they want to claim, they can do so by maintaining of books of account. And secondly, the thought process of the government is to bring simple tax regime without any specific deduction of exemption. So we are not allowing this. So this is a provision which falls within the realm of policy change that we should keep in mind, that now no deduction will be allowed from any income which gets attracted under section 58. Now coming to professionals aspect, he is running fast, I will also be fast. Here also there is not a much issue that we have discussed, same thing. Same thing already we have discussed, 50% of gross receipts or profession who have been actually earned, whichever is higher. Already we have discussed who are professional, specified professional. We know that this section or this provision can only be availed by specified professionals and not by non-professionals. So there are some issues which again is any qualification. Here also let us see. We shall play some quiz fastly so that we can enjoy it. Is any qualification or certificate required for being a specified profession? Members are divided, so since time is running short, so I will be also fast. So 50-50 exact. In my understanding, no certificate or qualification is required. If one has got a skill of accountancy, then if he is rendering accountancy services, he will fall within this specified profession. Similarly, technical also, he will be in my view, because the law does not require that he should purchase, only the law required is that specified profession he should fall, then he will be a specified profession and he can avail the benefit of 44 ADE. I covered this. This is only an extension of that only. Now coming to 44 AE, there is not much change. Only one or two issues which are coming. I will just take up. This is the meaning of owns. An SSC who is on possession of if a vehicle has been taken on hire purchase or installment basis. That we can say that there is a constructive ownership, then it can be, he will be deemed to be owner of the vehicle and he can avail that benefit. The second condition is at any time he should not be owning more than 10 vehicles. That is the catch, and we should be very careful to see that at any time that relates to ownership, not the use. Even if the vehicle is not in use, that will be counted for the purpose of 44. There are decisions to that effect also. So, and the language also suggests that. So these are the few case studies. One is at any time, another is buses, etc. And then transport business. Let us see. Fast, quick, we shall do. No response yet. One came. Their answer is no, because at one point of time, he is owning more than 10 vehicles. So I will not calculate how, but since he is owning more than 10 vehicles, so he will not be entitled for 44 AE. So we have to be very careful during the year that at no point of time the ownership of vehicle should go beyond 10. He can certainly avail presumptive taxation in respect of trucks, but not in respect of buses, and there is no restriction. As far as trucks are concerned, he can certainly avail benefit of 44 AE, and based on that per vehicle he can show interest, he can have to estimate, or he can do business income. Here also for 5 trucks on presumptive basis, for 4 trucks on actual basis, because he is owner of only 5 trucks, so he can do presumptive taxation based on ownership in respect of ownership trucks, and for rest he will have to estimate, or he will make out some strategy based on actual basis. He should have to show it. These are the rates. I don't think I should take much time. 1,000 per ton in case of heavy gross vehicle, 7,500 per goods carriage, or actually earned, as we have just discussed. The more common issues which should come. This is also a very, I think this is a, what should I say, on our professionals' part, I will say, not good to show such things. Here, can partner of a firm show remuneration, oblique interest from firm under section 58, oblique 4480 or 80? In my understanding, he cannot show because the High Court of Madras, the judgment of Anand Kumar versus Assistant Commissioner, has said so. And then Bombay High Court also in one case, Perija Jorabian Irani, it has been held so. There is one isolated judgment from Delhi High Court that too is of SMC. Single member case, that is case of Sri Anugupta Delhi versus in the case of a CA, and I am surprised that he got remuneration of 27 lakhs from a firm of chartered accountants and he returned 50% thereof as income. Can we imagine such a scenario where remuneration, because here you see in a general parlance also we can claim expenditure which is necessary for earning that income. So in any case SMC has given, but without, it is not any speaking order, just brushing aside the submissions of the revenue and saying I am following the strict interpretation and restored back to the file of the AO to consider ADA provision. But personally I don't believe that this is the correct proposition because as a partner we are not carrying on the provision. Whatever we are receiving, this is not a receipt of provision. And secondly, we cannot apply the blanket benchmark rate of 50% to that income. In one of the decisions of the president, our past president Atul Gupta ji, the court agreed that this is an income chargeable under the head of profits and gains of business of profession. So you are entitled to claim expenditure, whatever reasonable expenditure you have spent for earning that income. But that does not mean that it will fall within the presumptive taxation, and we, by applying the benchmark rate only without considering the actual component of income, we can return this income. This is the view, and these 2-3 decisions are against also. In case of business, it is big because that is with reference to sales and turnover. There, when we receive this income by way of remuneration, or it is not in the nature of turnover or sales, and there in the case of business, the gross receipt is coming in, applying the principle of ajustum general, that has to be in the nature of turnover. Then only it can be applied, but not here. So, maintenance of books of accounts and audit. In audit, there is a specific provision which says that if you have an income higher than that, then audit will not be applicable, even though that limit of 1 crore or 10 crore, 1 crore is applicable to you. But still, if you are returning income based on this presumptive basis, it will not be applicable. Applicable of tax audit provisions very clear. Books of account, there is no exemption given, but still applying the whole constructive provisions, harmonious construction, you can say that since relating to these provisions, specific provisions are there. If I show income below, then only I am required to maintain books of accounts. So in case if it is more than that, then provisions does not become applicable. That is the spirit of law also. So that provision will also not be applicable. So non-resident I will rush through because there is not much change. Only the old provisions in the new format. This is operation of ships other than cruise ship, 7.5% on account of carriage of passengers, livestock, mail or goods. Cruise ships 20% subject to conditions. Operation of aircraft, carriage of passengers, livestock, mail or goods 5%. Then turnkey power projects 10% amount of the paid or payable. Here in everything it is amount paid or payable, or amount received or deemed to be received on behalf of that person. Then presumptive income, this is the production, prospecting, extraction, mineral, etc. 10% cap. Then providing services or technology in India. This is the new provision which has come, I think, last year, for setting up of an electronics manufacturing facility or in connection with manufacturing, 25%. These are the some provisions which relates to non-resident. and has been clubbed together in section 66. With this, friends, I come to an end, and if you have got any query left, though I have tried to cover each and everything, still if there are something left, I will try to address them. Thank you, friends.
Yes, good evening, sir. We have some queries in the question and answer.
Please.
Just a minute, I'll read for you.
Please.
Under the presumptive taxation scheme of section 44AD, should the calculation of gross receipt or gross turnover include GST collections, specifically in light of the inclusive method prescribed by the section 145A? Are there any judicial precedent or official circular supporting the exclusion of the GST despite the language of section 145A?
This issue I covered in my presentation also. Actually, you see what I don't have any right answer, but there is a one decision in 44B where they say that GST will not be included. But there the term used is amount received or paid by to that person, and then they say that it is not included. There are 2-3 arguments that can be placed. That one is that 145 and 145 is with reference to maintenance of books of account. Secondly, GST is a statutory liability levy. Whatever I am receiving,
Okay, the next question.
whatever I have received, I am paying, and there is no profit element involved in it. So that this profit rate cannot be applied to that component. This view that this is subject to testing by judicial level, but this is my submission that we can very well take this view. That, and secondly, in TDS context, it has been said that GST component TDS is not deducted. From there also we can take a reference and we can take advantage of it.
The next question. The word profit actually earned may open the gateway to verify the financial and replace the presumptive income as a percentage basis with the actually earned income. Please share your view on the above.
I have elaborately covered this.
Yes.
Because even actually does not mean paisa to paisa you need to tell. As an accountant, at the foundation level we are taught incomplete books of account. Comparing the two financial statements, we can very well make out how much has been my income during the year. No perfect to the paisa, but broadly it will be to the nearer to the my correct income. It cannot be that I am having it 50% margin, 25% margin, and still I am saying that my income is 10%. Your investment, your living standard, your expenditure, your assets and liabilities at the beginning and at the end will certainly suggest how much income you have earned. Actual does not mean paisa to paisa you need to tell.
Yes, sir. One more query. RCC is a firm carrying on an eligible business of conducting online coaching classes related to quantity surveying of and under section 44AD is applied. Sorry, I'll start once again for you. RCC is a firm carrying on an eligible business of the conducting online coaching classes related to quantity surveying and 44AD is applied. RCC also has a small turnover from back-to-back invoicing where the RCC arranges engineers to provide the structural drawing to the client upon their specific request. That is, engineer bill the RCC and RCC in turn bill the client. This was also treated as a 44AD turnover. Department argued that since such professionals are engaged, this has to be considered as income from the profession and 44ADA has to be applied on this part of the turnover. Is this correct? Can 44AD and 44ADA be applied together?
This will all depend on the facts of the case. Because if they partners themselves are rendering the service in the field of profession, like we do chartered accountants do. When chartered accountants render the services, it is a services in the field of accountancy only. Similarly, if they are rendering the service which fall within the meaning of specified services, then certainly 44 ADA will get attracted, not 44 AD. But if they are employing people doing something more than that, then 40, because it all will depend on the facts of the case.
Okay, sir. Thank you. RCC has opted for the presumptive taxation since last 2 years. Okay. If someone is engaged in a Section 44 AD business but also carrying out the specified profession, how does choose to be report his profit 50% or 8%?
Specified profession will be covered by 44 ADA or serial number 3, but other business will be as per actual profit. They cannot go for eligible business. Assuming this percentage benchmark they cannot claim, they will have to work out actual profit, and if required audit, they should get audit done. Then only they can do that.
Hospital run by non-medical person, will 44 AD or 44 ADA apply?
That will be business only.
Can anyone declare the remuneration received by the partner under presumptive taxation? If yes, under which section, 44 AD or 44 ADA?
I have replied it. In my view, he cannot do it.
Yes, yes. Just,
We have dealt all these things, I think.
yes. A commission scenario arises when a professional services and 1.25 crore from the trading business. Whether such an individual can claim the presumptive taxation under the Section 44 AD for the trading business and thus at the same time opt for the Section 44 ADA for the professional services income.
Because the moment you claim 44 ADA, you are out for trading business.
Okay, yes.
It will not be an eligible business. If you are running the specified profession, you cannot claim both. The moment you say that you are carrying on a specified profession, you are out from eligible business definition, and both you cannot combine. I have very well explained through my case studies even.
Yes, sir. Yes, sir. Is there any last query left? We'll go with that.
There is one query, I think this is a very good query. Can 40A 1A and 40A 3 be applicable to former 40A 4 AD or ADA cases? In my understanding, these sections will not be applicable because there is no claim of specific expenditure under 44 AD or ADA. Unless and until there is a specific claim of any expenditure, these bills can trigger. But as far as 40A 1A IA is concerned, TDS provisions are applicable if your turnover is more than 1 crore. Here you may be treated as SSC in default for not making deduction of tax and source, but not 40A 1A for taking disallowance of that expenditure. There is one question, are astrologers included in profession? Yes, very well. If a chartered accountant is carrying on astrology profession, then that will be a separate profession, and for that he will have to go on actual basis.
In section 58, what is the relevance of the word profit claim? What if the person does not claim a higher profit?
I have discussed it in very much detail.
It is.
Because claiming means assert. It is not a choice. It thinks even a sabji wala knows how much he is earning daily. If he finds that his income is more than 8%, 10%, 6%, then he is supposed to work out that income only. Everyone knows what is his net profit rate.
An advocate got a commission above rupees 50 lakh and a TDS.
Advocates can reply better. Commission.
Yeah, that very disappears. Okay, get a 50 lakh. TDS deducted along with other receipt. Is audit applicable?
Yes.
Yes, definitely it's applicable.
Whether accounting profession, not a chartered accountant, can opt for presumptive taxation scheme? Yes, I have said so. Because it is an accountancy profession.
Sir, if assessee is taking classes, just a minute, sir.
Questions are very threaded.
Yeah, that's why it's disappearing once I started.
Very difficult to scan and see.
Sir, if an assessee is taking a classes in a coaching center, he has not a professional. He is only a BA pass and taking the classes of history of IAS coaching. Whether he is professional, can he file the ITR under section 44 AD or he is filed his ITR under section 44 ADA? Also,
He cannot do in either of them. But teaching is not a specified profession, neither are eligible with them.
very much questions. Okay, the remaining questions will be answered on the email. We will answer all the queries on the email. We will stop here the question and answer session, and we will move to the vote of thanks for the session. It is a great honor to propose the formal vote of thanks for the today's session. On behalf of all the organization, I would like to express our sincere gratitude to our today's speaker, CA Pankaj Agarwal sir, for sharing his profound expertise with us. The topic of presumptive taxation is a cornerstone of modern tax practice, yet it often presents the complex hurdle. Today, CA Agarwal sir transformed his intricate subject into a clear and accessible roadmap. By breaking down the law into a simple, understandable language, he ensured that every participant, regardless of their experience level, could grasp the core concepts. The transition from the theoretical to the practical application was seamless. The faculty addressed how to of the current tax regime with precision. The use of real-world case studies was particularly impactful. Analyzing these scenarios allowed us to visualize potential challenges and prepare the effective solution for our client. The interactive nature of the session led a highly productive question and answer. We are truly grateful to CA Pankaj Agarwal sir for his time and dedication showed in preparing such comprehensive study material and guiding us on the subject. Your ability to simplify the complex is a rare talent and it has left us the better equipped for the professional duties. I would also like to thank organizing committee for their hard work behind the scenes and the attendees for their active participation, which made the session a very resounding success. Thank you once again to all of you. Thank you very much.